Okay, so I think we are. Hi, everyone. Welcome again to this webinar. My name is Maria Wiedner, and today I know the title is How to Stress Test a Deal in 20 Minutes. But what I want to show you is how to use Claude to do the analysis. And I think I did get a bit confused with the with the topic for today. So what I'm going to show you, I think it will be interesting in any case, because what I want you to do is run through a case study of an investment, and then how you're going to create this investment case, and how you're going to create how you can create models with Claude as well. Okay, so I hope this is interesting for you. And then there's, of course, the stress testing at the end, which is the sensitivity analysis. So it's not only to stress test, but also like how you think about the model in general, and how you're going to make sure that this is the right investment case. So what we're going to do now is I'm going to uh, I think I'm recording. Um, Let me just share my screen here with you. Share one. And what I'm going to show today is this case study. Okay. So this case study here is an investment in London. So it's just like a brochure here. Let me just get this over here for you to see. Okay. So this is Gatehouse. Okay, so it's freehold for sale, and it's in Wentworth, and which is a little bit further out in central London. But it's an area that there has been lots of development happening, and it has really like changed in the past few years. So this is an office, and it's already being refurbished, and there is a tenant in place called Spacemate. Okay. And this is the investment opportunity. And then what they're asking here is they want 6 million. So the question is 6 million uh worth it? Like what is the the investment case here? Can you pay 6 million? Is 6 million you know a good deal or not? So these are kind of like examples of investments that we come across. um so we want to use now the model. So for us to stress test it, we need to understand what's the actual investment that we're doing. So if you know the area, like, or if you know the market, you know that this office is furnished, has been refurbished and finished in 2024. And then there is a tenant in place, which is for co-working space called Spacemate. Okay. And then the interesting thing here is that is even though it says, okay, it can be full vacant possession with a management full vacant possession, so it's empty, or with a management agreement in place with this Spacemate. And then the interesting thing is that they don't say, normally when you buy this kind of investments with a tenant in place, normally what happens is that they're going to show you what the rent going to be. And then in this case, they don't mention rent, so you might think that the rent there is not great. So it's actually like in it's actually like occupied, but not really occupied, right? And then further down in this brochure, you will see that they're actually paying £52,000 per year, which makes like, not even 1% yield. So you have to think about like this investment that it's actually like almost almost empty, virtually empty, would say. And then we need to think about, okay, if we buy this building and keep as an office, can we find new occupiers? Can we find a tenant that will pay to, occupy the space, and then if they're gonna pay, what will be the rent like that they're gonna pay, right? So it's very unlikely that you're gonna find a tenant because it's been already 2 years with, with very low rents, and they don't even mention that, what is this rent there, like how much they make per year. So therefore, uh, the best assumption is for us to change the use, and then changing use will be to make this like a residential development. Yeah. So even though the building is there, it looks like it's going to be a resi development. So we need to find out what is going to be the um, the investment case for it. Okay. So the idea here is to buy this building, and you see like the pictures are very good. They're always like full of people. We don't know how much of this was, put afterwards with Photoshop or AI. But the idea here is that it is very close to a shopping center, which is always good for, like for proximity to retail. Normally, like you get more money for it. And then there's Wandsworth Town, which is a train line, so it's close to public transport. And then like Putney seems to be around here. We don't know the scale of it, but it's an area that is up and coming. So this is the actual building. And what we're going to do then is say, okay, we need to stress test it. But before we stress test it, let's look at what are the scenarios that we want to stress test. Okay. Um, so what we want to talk about here is how to turn this scenario, this model, into a clear investment case. Um, Before we even open models, right? I'm just going to make it the presentation here. Before we open the models, most models are built from the wrong end. So if you're going to use this case study, and then you're going to say, okay, is 6 million a lot? Is 6 million a good deal? Like, what is your opinion? Then you're gonna say, okay, I need to create a model. Then you open Excel, and then you fill in the assumptions and start calculating. Normally that's what, I would say 90% of analysts would do. And then we're gonna hope for a story there, wait for the outputs to tell you something. And then the gap is that the models don't really calculate it. Like the model only calculates, it doesn't communicate anything. So building from assumptions to outputs is wrong direction. So the model has no argument, only arithmetic. So you need to think about it. And what we need to do then is we need to think about what is the questions that we want to answer. So before you stress test anything, you need to find out what is the actual question you need to answer. So what is the decision that the investment committee needs to make? Okay. What is this dashboard, what it looks like, and then you build the model. And this is one thing that if you give AI a good structure of like a good prompt, for example, then Claude especially can help you build this very quickly. Okay. So I'm going to show you. So the case study here, so you need to understand the case study is the asset is the gatehouse, 6 million, and then it was complete in 24. EPC is A, BREEAM excellent, current occupation space made, and they're paying just £52,000 per year. So if you see like the yield's not great. Income play, so retain space made, hold for yield, and the model is a cash flow model, like the standard, like the rents, and then you assume that you're gonna increase the rent at some point. Or what I think is more realistic in this case will be to do a residential conversion, and then the model becomes a development appraisal. Okay, so you need to be very comfortable with this. And then what you need to understand is how those models will fit each profile. Um, with the income play, there isn't much to do, because like the only thing that you can think of is like getting a new tenant in. But if you didn't get a tenant in until now, like a better tenant paying more rent until now, it might be unlikely that you're gonna get in the future. So it'll be very hard. It'll be a very hard sale. But then you could create this model for a residential conversion, and then you have to think about, well, if this is going to be resi conversion, what it should look like. Yeah. Um, Design the output first. So before Excel is open, you need to think of 3 questions. So what is the one question I see needs to answer? Is it profitable or not? How long is going to take? The 4 numbers, what are the 4 metrics that answer this profitability question? Is it a good deal or not? And the push points, which is what does the reader challenge, and where does this live on the page? And this is pretty much where we need to stress, right? So before we stress anything, you need to think about, like, okay, what is the investment case, and how we're going to stress um, the main variables that are important um, for the outcome of this investment. And normally in resi, it's the GDV. So what are you gonna sell for? Like, in 2 years time, do you think you're gonna sell it for a lot more, a lot less? And then this is the whole idea. So what we're gonna do is we're gonna use Claude to think about it. So we're gonna do a prompt. I need to design the output dashboard for conversion development appraisal. The audience is an investment committee. What KPIs should appear, in what order, and what goes into the sensitivity table? Give me a clear hierarchy, not a list. Okay, so we can then open Claude, and then, so I'm using Claude here. If you don't mind telling me what kind of AI you are using in your day-to-day life, that'll be great. Okay, so I've done this already, so I'm gonna close here. So I've done the I'm gonna start here my um my investment case. So that prompt here, then we're gonna copy and paste. I need to design. Um, you need to give this context, right? So this is gonna be your prompt. Let me just do here. Um, Let me copy here this prompt. So I'm just gonna copy here the prompt, okay? And then you can just paste in there. I need to design the output dashboard for resi conversion development approach. The audience is an investment committee. What KPI should appear, in what order, and what goes into sensitivity table? Give me a clear hierarchy, not a list. Okay, so you can just start from a new chat here. And then what's going to happen is that they the they Claude is going to give you some answers. Okay, it's all well, but actually, what we want is that they stress test this particular case, right? So, okay, do I agree with it? So let's just read a little bit and say, like, okay, so the very top of page, always visible. These 3 answers the question, should we proceed? Okay, so when do you need to proceed? When you have profitability. So how do you measure profitability? So normally it's like profit on cost, return on equity. If your investment case is already defined, because like every time you go to investment committee, they're going to look at equity multiple, for example, which is one area that they always look at, and profit on cost. Then these are things that we need to look at. So then you can tell, like, like, we're gonna start with those, and then please give me the another one. So all very good here. But then you're going to say, okay, this should be based on, I'm just going to open here my other chat that I was, that I built, because the idea here is, we can say, okay, we have already um, this building. So I'm building a development appraisal. So where am I? So, okay, so I'm just giving I'm building development appraisal for potential resi conversion loan, key facts, freehold purchase, I need to design the output page. And before I build the model, the audience is an investment committee. What KPI should appear in the dashboard, and what order, and so on and so forth. Give me a clear line, which is what I've done before. And then you're going to say, please, well, I don't need to put, use the case study attached. Please use the property attached. I'm just going to delete this part here because we have already done the first question before. I'm just now the property attached, and build me the dashboard and the cash flow in Excel. Include the sensitivity analysis. So one thing that is important for you to think about when doing this, very quickly using AI, is that you always need to give context. So in our case, the context is going to be the gatehouse brochure. So I'm just gonna put the gatehouse brochure, and then let's see what AI we're gonna come back with. Okay, so this is what I did. Okay, and then what I'm going to show you is the output, because this is going to take a little while for AI to do. And what I'm going to show you is what a Claude has given me as output from the previous chat that I had with it. Okay, so as you can see here, I played a little bit with the numbers, but this is pretty much what AI has done already. So one thing we need to really understand is these numbers, if these numbers are correct, because AI is pretty good at making up numbers and so on. So you need to test, you need to check if these numbers are realistic, and also if the assessment is correct. So here, you're gonna have to, but for a start, this model here looks pretty good, like from a dashboard, right? Because if you don't tell AI that you need a dashboard first and how to make it very clear, AI is not going to give you this kind of output. It's just going to give you like a normal Excel sheet. Well, depends on how lucky you are, but like this dashboard and the KPIs are very important um, to be thinking about. Okay, so you have to add the information there. If you have information about Wentworth, like for example, you have a research that you have done there, or the latest house prices, then you should also add to this chat, right? And if you have a lot of information, lots of research papers, you can on Wentworth, particularly the area, then you can even create what we call the Claude project, which is projects here. So on the projects, what happens is that you can actually create new projects, and then you're going to add lots of different. It's a chat with more memory. Like that's how we train, so to say, the. So it's still thinking, and it's gonna say, I'm gonna build in Python. Like it's not what we actually asked for. Um, but here is the model. So as you see here, um, it's going to come up with some answers, and the assumptions right? So the first thing that we notice is that like, okay, so it's not going to work. Why? Because the development margin is pretty tight. The profit on cost is pretty tight, and then you have here an IRR of less than 1%. So this is not so much. It's not a very good idea, right? So the question is like, so instead of offering 6 million, how much you could offer, you know? And then this is the how you can stress test this is you can also say, okay, what happens if this is if you're gonna pay here 5 million, for example, what's gonna happen? And then oh not 50, 5 million. So then you can say, okay, does it impact your IRR? So if you pay 1 million less instead of paying 6 million, you're gonna pay 5 million. Then it starts to look a little bit better. Okay. Uh, One thing that you really need to think about is the GDV. Okay. So if here we this is an interesting sensitivity analysis. But what we have to do here is think about, okay, um, if the build rate is 170, and then you sell this for 700 per square foot, your IRR here is going to be 3%. Yeah. Your IRR here is going to be, no, profit on cost is going to be 3%. Oh, dear. So you only start to get like a little bit better when you have, for example, 850 is your assumption for profit on cost. 850 is your assumption for the exit pound per square foot, and the build cost here 140. But as you see here, so you have to reduce a lot the build cost. Our base case is 170, and then your this model only becomes reasonable if you're gonna sell this for 800 and like say you want a 33% profit on cost, then you're gonna get like 850 is the minimum you can sell it for in order to make it profitable, and then really reduce the build cost to 140 per square foot. So you have to think about how realistic it is that you can build for 150. And also in terms of cash flow, what we need to be careful here is because this model, all models in AI, they're not flexible. Okay, so here, once you get the assumptions for example, build cost, this build cost is going to be over 1 year time, right? And then it doesn't go to the right, it doesn't go to the left. So if you want to change for example, you're not going to build over 1 year, like 4 quarters, you're going to build over say half a year because it's like a if you want to play like like delays and so on, then that doesn't it's not automatic, so you have to adjust the model here to be dynamic. But for a start, if you don't want to change the times or anything, this is I find it pretty useful. Also professional fees, contingencies, and finance and interest as well. This assumes that you're gonna pay 5 million in equity straight away, and then you're gonna draw down on only when you're gonna, start financing only when you start drawing down for the build cost. So if this assumption is not right, then it means that you're gonna, you have to adjust the model there. The arrangement fee is correct, so it's period zero. Then you have a sales and agents fee, and then you have marketing costs, and then you have GDV unit sales. The good news here is that it is assuming that there is like a sales ramp up, so to say. So it's building here over a year that you're gonna sell. But again, this is not flexible. So you need to be very careful when you're building models from Claude that you check those, because it doesn't mean that if you're gonna change some assumptions here, then it's gonna flow through. It is not. So this IRR here will not be correct because it's just using the same assumptions that Claude started with. Okay, so be very mindful of that. And then you have the scenarios here, and then also this is a good way to present this is like the stress testing scenario where you need to you can present this to the investment committee, and I think it looks pretty good. Like I think from a presentation perspective, AI can do a great job. What AI can't do a great job is actually connecting the dots, like creating flexible models. It's not there yet. It may be, but if you have to spend a lot of time telling, like, oh, this is the case, this is I want to make flexible, I want a day function or some sort. So I think it, using um, for building like the skeleton, I think that's very helpful. But then at the end, you still have to go in and check everything. Like, okay, I'm not going to sell over a year. I want to sell it over 6 months, and then this, as you see, like is divided by four, is not working. So you have to be careful with the assumption. You need to understand. So always say, like, if you're going to use AI for financial models, you have already to be pretty good with financial models. You have to be already very advanced, because then you understand what actually AI is doing and how you're gonna fix it. Okay, because otherwise you just oversee this and then it's not doesn't look good. Okay, so I have 3 minutes now. If you have any questions, please let me know. There is a question box there. So on the dashboard hierarchy, um, I think the main thing is like make sure that it looks good. Um, oops, yeah. Um, and then you use the most important KPI, so to say, for um, for this investment case. Okay. Um, the sensitivity table, the most important stress testing here is how much you're going to sell for and how quickly you can sell this. It might be that you want to, instead of playing with how long you're going to sell it for, but you can be like how long you can, for example, if you're going to be like a build to rent, how long you're going to rent it out, and then what's going to be the yield, and so on and so forth. It does seem like the 6 million is a bit of a push for what can be done, because even if it doesn't work on the sale, normally selling resi will give you a higher profit on cost, because you're going to sell the capital value. On the rental side, the yields tend to push down the capital value a little bit down. So you need to, yeah, 6 million seems expensive. So when you're building the model, make sure that you start with the output first, the dashboard, and then work from there. Okay. And then everything else, have a very good sensitivity analysis in there, and then everything else is noise, really. So you should stick to what you know. So the two scenarios is vacant possession, which we play around, and then the scenario B, which is keep things as they are and they're not doing great. So that's not an option, I would say. Consistency is credibility. So you need to, when we're doing this stress testing modeling, I think credibility is the most important thing. And then credibility comes with you checking, and making sure that you understand all the numbers there. Um, Three things to take away is that the dashboard is the argument. So you have to, this is the things that people are going to look at it. Use Claude for the structure, but then the consistency is where your credibility is going to come from, and that's your knowledge really in fixing this model and understanding how the numbers flow through. So then, like, once you go to the argument, then to argue it, then this is the main thing. Okay. So please, if you have any questions, you can book a 30-minute call with us to answer any questions. As I mentioned, like, we can help you build your models, build this dashboard, or do some AI in your company, or help you with AI. There are two ways we can do it. Like, either we teach you how to do it, so please come to a course, or if you want, if you have like any questions, we can do it for you. Like, we can implement models, we can create investment memorandums, we can help you automate some tasks that you have with AI or without AI, with the, the technology. So reach out if there are things that you still want to know, or things that you want to do, you want to become more efficient. We are here to help you with that. Okay. So without further ado and without questions, if you have questions that it doesn't, like, maybe he wake up in the middle of the night, like, oh, I have a question for Maria. Please do send the questions. Like, we're happy to hear from you, and help you with all your projects that we have with real estate, with your models, with your how to become more efficient. And if you need anything, just let us know. Okay. So thank you all so very much. It was a huge pleasure to be here, and I'll see you very soon. Thank you. Bye.